Good morning. Good morning. Give me a sec. I'll get that screen up. Da, 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 da. As I was saying, if we actually do deliver into that target, good because targets are hit, holding how we want to expect. Unfortunate because usually if targets are hit prior to the morning open, that morning tends to consolidate. So we may run into an issue where we just bounce the rest of the morning. If we just look on the higher time frame. Right, obviously large range here. Reaching into liquidity. We've already hit one thing sell side and two. So we've hit both of these lows. Just need that external range. But if we're going to create large ranges prior to the opening, then we can tend to see just that consolidation in the morning. So we may end up with that. Getting into 9:30. If we don't deliver into that by 9:30 though, I still would expect that to be the target for the morning. Remain underneath new week opening gap and this old new week opening gap we've been continuing to use. All right, this was clean here. BPR wick broken with the fair value gap, aligned with new week opening gap. This is why we were looking at that. Minute. All down close though. So may want a retracement. We may put in a false low. If we start breaking above, so if we keep this low and then at 9:30 we go straight up, kind of pushing through this fair value gap, I think this would be a false low. So for the time being, we would look for short-term retracements into these inefficiencies here, right on the 5 minute, because notice there was no kind of return into any of these fair value gaps. So we may see a retracement into those and then the break lower. If this fair value gap were to give way right here. A few more seconds. Let's see what we get. Rather lackluster opening. No news. Pure price action here this morning. So yeah, still above this 1 2 minute fair value gap. It's both. Right, 1 minute and a 2 minute. Same fair value gap. We'll put just 1 minute for now. At the same time, right, breaking up and through this. Well, now we've created, in a sense, a little breaker here. Low, high, lower, low. Broken. Just to have in case. Let's see. Just label them basically equilibrium. In the case that we push up and through these levels here instead of holding. She my number one. I don't need no one on the side. volume imbalance is interesting here, trying to leave. So because I'm already looking at this bearish, even though this is the one that we're really paying attention to because we never get consequent encroachment, I'm also looking at this one. So not as heavily, but I'm thinking if we hold that, I want to see if we could hold it again. Instead, we're leaving it with the volume imbalance. So breaking through premium with the discount. As I mentioned, however, this one really is the main one we're looking at. So not putting too much weight on that. We could find short-term support here. But now that we've gotten into this, especially once we can hit consequent encroachment, because if this candle were to close right now, we've just created equal highs right here. Buy side is what we would see, really. Okay, so we get through it, still buy side. And we close, what did we close? Oh, okay. Close above consequent encroachment. Look where we've hit now. So here, closing above consequent encroachment, interesting. Leaving a volume imbalance. Potential fair value gap aligned with new week opening gap level. More bullish. Higher chance that we run through actually this fair value gap. Continue to push now for a high. Where we pointed out here, and then this is a high that's near equilibrium. It's okay, as we mentioned, right? We would have preferred to see that low taken. But if we get above this, that scenario that we had spoken about, where this can become a false low for the time being. So now people may be trying to chase this low, right? When they want to see price attack this low. We get a short-term reversal to just target untouched inefficiencies first. And then once we clear out some buy side, return into inefficiencies, then we may return for that low. Understanding that we now have basically relative equal lows here, right? This low, Friday's low. But lows don't always need to be taken out. That's where we can run into an issue. So like seeing this right here, I would go, my immediate attention goes back to this high. So like we spoke about, this did exactly really what we didn't want to see. I mean, it didn't matter. But we spoke about the possibility of going through that. If we go through it, we continue higher. Closing above consequent encroachments, the first sign that we're going to continue higher. Really, the first sign came here, leaving this premium with a new discount. Closing on consequent encroachment above, pushing up and through now. There's that high that we were looking at. Short-term buy side here. If we were to take, let's go higher time frame kind of, highest low. I think that's the same range, to be honest. Interesting. Okay. Inversion. First time coming into it is, look at that. 15-minute inversion is really equilibrium of this range. That's right here. High to low. Resting above buy side. So I like the possibility of that. We've now created a few new discounts along the way. So my immediate attention goes to this one because it's the one that we created as we leave this inversion here. Ideally, this one holds. We can come back into new week opening gap because we did leave another one here. So I would still be okay with seeing that because we do have that perfectly aligned with the new week opening gaps as an area of support. But if we really want to just kind of push into this now, we shouldn't come much lower than this fair value gap here. Should see expansion now, up and higher. Getting above this 30-second volume imbalance is a good sign. We should be able to reach into buy side here. Engineered liquidity here at this low to take it out later. Just that, yep. Beneficial that we create a bullish volume imbalance there, as long as we can keep that open. should be what we want to see. Higher prices. What do you mean? Mm. 30-second. Yeah, I'm still confident and bullish there. Leave that open. Notice we don't even go into that at all. So we may want to return into that first. Because if we're not going to touch it. See if we come into it just quick. Look at that. Couldn't even get back into it, actually. Hit it perfectly. We see that quite often. Could easily run through the high. That'd be cool now. Say we want to go back down one more time, that's fine, but we probably won't at this point. If we can't even get in there. Through the high, through buy side. This is that 15-minute inversion. First time we'll be coming into that, okay? Closing on the high is nice. This will be a scenario where, say we run this buy side. This is still untouched to me, okay? We hit it perfectly. Never came into it at all. After clearing buy side, we can return into this, still hold. So at that point, if we clear buy side and start retracing into this, I would actually expect to see this hold underneath that with a close, then maybe return into these lows here. Right, we held that fair value gap. Never needed to come into the lower one, so that was nice. I mean, the way price is moving into it can give you an indication. But most of the times, you don't really need to anticipate it. At least for me, right? Like, I'm not finding the need to really anticipate it much. Like here. We were going to see if this one could hold, but we also understood if we close up and through it, then we're going to keep running for targets. So now one way that you could tell is just wait for the candle to actually close, right? As soon as a candle closes in here, that'll be a good sign. If we were to hit this and wick away, that is already showing an indication that we may want to hold that area. But like we saw this morning, immediately, the very first candle to return into this fair value gap closed above consequent encroachment. Pair that with the fact that that volume or that candle was created by a volume imbalance. That's why we kind of understood that if we're going to do that on the first entry, higher likelihood that we actually go through that fair value gap. We push up and through it, hold here. Right, like this is kind of what you would want to see more with fair value gaps being respected. Wicking into them, closing away, especially if they can't even really close near the fair value gap. Like notice how the bodies aren't getting near that fair value gap, it's just the wicks. At this point, 1, 2, 3 equal highs. Very interesting. Random level, right? So we have this 30-second. Look at how this consequent encroachment is. Is it? Let's see. Let's just be sure. Yep, same level. Okay. So fair value gap consequent encroachment is the high. Into the 1 minute now fully for the first time. So because we haven't cleared buy side and we're coming into this, still would want this to hold if we're going to go higher. Right, we're not expecting this to be broken. We have equal highs resting below this inefficiency, below the higher time frame 15. Another run into it. Look at that precision though, right? Beautiful. So that's beautiful delivery there. It's exactly what we would expect to see. Now we go up and into the inversion for the first time. Look where we close. Hello. Volume imbalance into consequent encroachment perfectly. So now when I see that on this first candle, we're going to close with the body on that level. That is already kind of indicating to me we're more likely to want to stab up through it if we're closing on the high, basically. We obviously gave it one candle to see, but more than likely we want to extend up into the high, which we've just done. So we've just hit the high. At this point now, we may get a slight retracement. But I mean, look at these levels here. Look at that precision. Closing on the consequent encroachment, wick into the high, reverse into now the range, only after hitting the high. Wouldn't be surprised to see maybe price close on this. Like if we close back above this buy side, higher likelihood we would continue. Closing back in this range, we can now kind of maybe attack lows here. Because we've created equal lows. So now that we've hit this inefficiency, we have now equal lows here. We could return into that, which would just be the 1 minute volume imbalance as well. Especially notice how we left the 15 minute with a premium. On a 30-second chart, possible inversion here. The fact that we close underneath consequent encroachment already indicates we may want to continue lower, leaving behind a fair value gap. The 1 minute itself, though, is holding that level, so. Volume imbalance, my first. I love a volume imbalance, I'm telling you. The volume imbalance is bae. NQ just going down. Yeah. Not really agreeing this morning. A little choppy NQ, but on a morning like this, I don't really pay much attention to them. If they're not moving in tandem and we don't have news, I don't pay much attention to it. Nice. Another step up into. So we held actually that fair value gap. So even though we give up consequent encroachment, still hold the actual 30-second. One more stab into a high. We'll see what the 1 minute can do. You'll notice we actually use this inversion here we're talking about. So as we hit it the first time, above, come into it, hit the low. Closing above this fair value gap. Let's see. So a new 15 just opened actually. Getting a little more tricky because now we're at equilibrium of the range, right? So it's a little tougher to gauge where we want to go. Closing above that level, however. Still haven't closed above the 15. I want to see if the 1 minute can close above that. Why am I using the 912 and not the 919? Okay, let's see. 912. I gotta think 912 and not this one. I'm using this one because this is the fair value gap that breaks us underneath this new week opening gap. Okay, so I like to pair the PD arrays with coexisting higher time frame PD arrays. So now this is all important going lower and lower. But when we wick this new week opening gap for the first time, that kind of is setting up a new key area for me. So as this fair value gap gets created, as we're pushing through that, that immediately becomes important in my eyes. Right, this fair value gap being created as we're breaking into that new week opening gap for the first time. we then see that, of course, the fair value gap gets held. Right, so notice how no wick returns into consequent encroachment, and then we break once and now twice. This is important to me because this fair value gap's consequent encroachment was never hit, whereas this one was. Right? If we look at this 1 minute, this fair value gap was already fully repriced and delivered lower. So that's why I mentioned this one has my attention, but really it's this one because this consequent encroachment was never hit. So we can still return into that and hold. So we would need to get above this one for me to trust now higher prices, whereas we could have got above this one, held within this one, started going lower again. This one holds more weight. That's why now leaving it with the fair value gap is more important. That fair value gap should hold. It holds. We've closed above the 15 now, creating a new discount. So now this one here, even though we have lows, if we really are bullish, this is kind of a case where trend line traders win, right? We'll probably create something like this, which obviously it's not the trend line holding price, it's the discounts, right, that we're creating. But in the short term, we may want to continue to push if we're going to close above this 15. We still haven't done it on the actual 15. Yeah, no problem, brother. Hope that explanation made sense. If not, let me know. But we expect high prices still for me because we're doing this, right? We're breaking through the premiums now. This is a little tougher because I like to wait for the actual corresponding time frame candle to close. So if we're using a 15-minute fair value gap, I like to wait for a 15-minute candle closure. But we can often kind of determine short-term order flow along with it. So like as we create this fair value gap perfectly aligned with the 15-minute, that to me is not random, right? Too precise, which would make me think that now we want to use that fair value gap to actually continue to push us higher into potentially actual untouched inefficiencies, right? So we have this volume imbalance that I'm looking at. We have buy side sitting here, which is in a volume imbalance as well. So 2 for 1. I like seeing that, right? A little 2 for 1 special and a fair value gap. So we'll actually like this. Buy side with just this whole fair value gap, like that. I'm looking over here to the left and I'm looking at old premiums. So this is what I do to kind of monitor order flow along the way. All right, I'm looking at where there were old premiums that were either left open like this. So this is a pretty significant volume imbalance because we never return up into it once. So areas like this are going to be important. And look at that. Right, I look and see, do areas like this on the left side as we're going lower, do they get respected or do we continue to push up and through them? All of these continue to get pushed up and through, right? All of these. Now we've hit another key area aligned with the 15 and we're rejecting from there. So now this 1 minute bullish becomes somewhat important to me because if we were to close underneath that, we're creating an inversion here while closing back inside of this old range. And we can't forget that the 15 is still really the predetermining candle. So we could wick like this and this candle can return lower, right? Stay bearish, which would obviously mean the 1 minute now is going to break. Leaving that with the fair value gap is interesting, okay? Or a volume imbalance. That's clean. Breaker. High, low, higher, high. So starting to form a potential sell here. Because we're still holding this, though. Still holding the actual inversion itself. Let's see if we create a 1 minute fair value gap somewhere here. Yep. So the 15-minute candle closing above the 15-minute fair value gap is stronger confirmation that we would be looking for. That is correct. So we got right up and through that. as you mentioned, we're still holding that inversion. So if we're going to hold that inversion, can still chop here. How long do we have for the 15? Still got 7 minutes, so lengthy amount of time. See if we get back above this area. Turning more into high resistance here, right? As we're heading up higher and higher. Clear the short-term low. Overtake that low. Hold the inversion, overtake the bearish. What's 2 minute? 2 minutes, still pretty bullish actually, holding that. But we see how this volume imbalance here is holding everything. First candle above the volume imbalance. May have a chance to use that now as an inversion. Where all of these wick, reject up and above, even though we haven't closed above this high. That's kind of the only hesitation, right? We weren't able to actually close above it. Maybe lower time frame did. Lower time frame did not as well. So still haven't closed above. We may start seeing within this little fractal, a little seek into short type of thing going on. So be wary of that. Basically taking place around a higher time frame fair value gap. That's kind of what we would expect to see there. About hit that 15-minute low. Kind of looking at this little inversion here. Just want to see what we do there. Right, bearish overtaken. Underneath the volume imbalance, not ideal. Especially with that bearish volume imbalance here, not being able to close above range. 30-second, rather bearish as well. So yeah, just hitting that consolidation stage. We've hit that buy side. We've hit really these equal highs as well. I still like this high, but we may just get that high resistance now delivery. Let's see on a 5-minute sense. If we run this low, I wouldn't be really too confident that we may want to run lower. As I said, I kind of get seek and destroy vibes in here right now. Got through that low. We could be just be waiting for the 15, right? So we have that time displacement, time distortion, where the 1 minute can chop here until the actual 15-minute closes. How long do we have? 3 minutes still. Three drives. Yeah, you could see it as 3 drives. It'd be a little sloppy though for me because this low clears a low within here. Because usually we like to see the lows left, so it'd be like 1, 2, third drive, and then we break that low. But we could see this as 1, 2. 1 full, 1. A little sloppy actually. So at this point, 2 minutes, 15 looks like it's going to close underneath that area, okay? As we mentioned, this was an important area on the way up. Closing underneath that now. Closing underneath that. High, low, higher, high. Broken. I think this low here is nice. Nah, nothing. Closing underneath this volume imbalance like that makes me think we go lower. Five-minute cents. Let's see on a 5-minute chart. Through that sell side, new week opening gap. This is kind of my next area. Notice they're the same level. I always like to see that. Fair value gap is the new week opening gap. We still have this false low we spoke about this morning. The three Indians. I never heard that, to be honest. But yeah, you would see that. 3 highs. Actually, I think I've heard that once. Two-minute fair value gap. So let's say we want to keep going lower. This fair value gap here, because we wicked it, broke through it, wouldn't actually want to see price revert into that fair value gap there. Which means the most recent 2-minute here is what I would expect to hold. But usually you want to see the lows that get created into that hold, right? So like this. Like if we had a higher time frame level, like this was buy side, you'd want to see like a 1, 2, 3, right, where all the lows hold and then we break. Whereas in here, it's kind of something more like, all right, we hold the first 2, but then we clear that low, come up again, and then break. So still the same in theory. Just a little different, more of a manipulation, because this low is cleared and this high. So here's that 2-minute. Oh, we hit it perfectly. So we nick the 2, reverse, holding this, where this was that original 1 minute that we held on the way up. So on the way down, we want to see what we do there. But yeah, hold the 2-minute, wick into, we've wicked into the low of this 1 minute perfectly. At this point, the 15-minute candle is closed bearish, okay? So huge rejection on a 15-minute. As we mentioned, this is still the false low. I think we come back into this low. I like that idea. Especially if we get underneath a new week opening gap. I like the idea of going back for the low there. So we get underneath that new week opening gap, underneath this fair value gap, inside of the volume imbalance. This will be pretty telling if we can leave this volume imbalance open. Hitting the inversion for the first time. There is a small fair value gap in here. This is also an inversion. I'm kind of looking at this as the biggest area to hold. What's the 2 minute? 2 minute more bullish though, right? So we're kind of creating opposing scenarios within the charts. 1 minute lower, 2 minute is holding. And we still have this untouched 2 minute fair value gap right here. So this next minute, let's see. Yeah, the 2 minute wicked that pretty aggressively, which could be more bullish. Did the 15 hold the fair value gap? Because we had a fair value gap here. Into the 2 minute for the first time. Old sell side pull. Held that 2 minute though pretty nicely. See if we can get underneath this consequent encroachment again. Can't hold it. Yeah, it's relative equal lows there. Friday's low is that level. Held the 2 minute once. Let's see. Tap the 2 minute again. See if you want to just squeeze here for a little bit. See if that 2-minute gives up this consequent encroachment or not. Did not. Still back into the range. Close back above. Let's see, 1 minute. So we have equal highs there. At this point, just consolidate and you can. Minute. We'll just keep banging this 2-minute volume imbalance right here. Or the 1-minute volume imbalance paired with the 2-minute fair value gap, sorry. We've hit the 1 minute that's within that a few times. And we created equal highs, didn't hit consequent encroachment. Which makes me think those highs want to get ran. Hi, the 1 minute, notice that reaction. Hi, the 2-minute as well. So now the 2-minute has fully repriced this fair value gap. We'll see if we can close below if we just want to keep pushing up. Hit that consequent encroachment now. Yeah, we should get up and through that. Right, this seems more bullish. Doesn't want to. I'm really just getting squished here. Get that volume imbalance still. Notice how like the consequent encroachment of the 2-minute is almost consequent encroachment of that volume imbalance. It's always cool seeing little things like that. Hitting the high of that 2-minute. 2-minute has closed underneath. So when I see something like that, Usually that would mean that this fair value gap should be balanced, okay? Obviously we're consolidating here, so it's a little bit different. But if we're going to fully reprice into a fair value gap, close back underneath that fair value gap, more often than not, we should continue in that given direction. We do have that false low here that we want to see. We have to watch out because we have a 1 minute fair value gap right here that we've just smacked into. But I like the idea of, yeah, we held that nicely, man. Overtake that bearish again. I want to see what the 2 minute does. We've already closed underneath it once. If we can close underneath it again, I like the idea of going lower. Especially if we can get underneath this. We're hitting this little 1 minute fair value gap right here. Close on the low of it. Holding the low. Negate. Ooh, opposing volume imbalance. So 2 minutes still closed underneath. Yeah, ugly delivery. If I had to pick a side 100%, I think I would choose a low one more time. Breaker, cleared, buy side. Yeah, I like a low one more time. I like that. Just don't like how we wick these discounts like that. If we can negate this bullish volume imbalance, that would be nice, especially if it can close underneath this bullish fair value gap. It can't. We close in the volume imbalance, but we can't get underneath the 1 minute. And we've wicked into the new week opening gap now. We want to see price extend through that. Yeah, it'd be nice. We took a short off of this volume imbalance here. To get 5 handles, I just need this candle's low to be taken out. That's really what I'm waiting for. That'll be my exit if we can get there. Now we're broke even, so. Oh, perfect. Okay. So I was short there. Just got out. Right, we had a... No way we don't get the low, though. Choppy market, I went in low risk. Just one. In here. Right, so kind of choppy, but breaking underneath this low, closing underneath this fair value gap, leaving this 2 minute aligned with that important 1 minute volume imbalance that we mentioned. Seeing how we wicked it the first time, the second time we go up into it, I'm just going short on it. Stop was above this candle's fair value gap, so here, because it's the 1 minute, but also above the 2 minute. As soon as we broke through the low, stop goes break even. And then we target this low. As we mentioned, we were targeting this for 5 handles. Obviously, the sell side target itself is sell side, right? Which made sense. If we're going to reach into sell side, we should hit that low. So we'll find just 572.67. Missed the low again. Disrespectful. Gotta swing high at least. As you can see, on Mondays without news, right? Very hesitant. Slow to enter, quick to preserve capital, as I've said before. So not really in a rush in all of this here. I need to be fairly certain. And even if I do, I like to keep it short. Oh. Still like this low though. I'm gonna go like this. Using that as resistance. Volume imbalance there. Still like lower prices, honestly. This low. Because if we're going to close under that sell side like this, I would think that we would want to continue lower. We've returned into that new week opening gap a few times now. That's kind of what level I would expect to hold. A little uglier, but high, low, higher, high, broken. Hole breaker, we could refine it to the lowest down close. Breaker here. As we close underneath that level. Pushing for the low. Yeah, this is all immediate rebalance in here, right? But more of a consolidation. Immediate rebalance, we would usually move right away. So we'd hit this candle, close underneath, and then wick away. Whereas here, we keep revisiting that new week opening gap level, which we may want to use that. We're going to keep wicking it. What's the 30-second doing? Closed on the high this time. Still the breaker there. Notice we've done the same thing 3 times in a row, okay? As soon as this candle closes, we wick into the new week opening gap, open with the bearish volume imbalance. Next bullish candle wicks into the new week opening gap and opens with the bearish volume imbalance. The third candle wicks into the new week opening gap and opens with bearish volume imbalance. Now, what does that tell me? That tells me that even though we're going higher, it seems like it wants to reject those levels more aggressively. Obviously, we can consolidate here, but I would at least expect these equal lows here to be ran. We have a lot of like PD region here, right? Volume imbalance, inversion 1 minute. If I was to show you all of these. So we have an inversion here, just below the sell side, or just above, excuse me. We have a volume imbalance that's aligned inside of that level. Notice how the volume imbalance consequent encroachment is the consequent encroachment of the fair value gap itself. Yeah, hideous delivery, I would still favor lows, however, even though it's ugly. Into the inversion. So we cleared the equal lows at least. That was nice. Let's see if we can't get under that. I want the lows, okay? Here, I went short off that new opening gap. With now this candle closing like that, we'll break even. We're targeting sell side. So if we can get into that sell side, boom. That's all we were looking for there. Okay, so nice. Good morning there. I want to swing low exit, so let's go ahead and get that. Caught the swing high. Nice. Yeah, honestly, we might wrap it up. I told you guys I might give you one of the classic, right, true days. And look here, 2 for 2, 10 handles. All obviously we'll run through it quick so you guys can understand what's going on, the thought process, all that, right? Clear. Don't need all this nonsense up here anymore, really. So obviously here, okay, when we opened up this morning, we wanted to see yesterday's or Friday's low be taken out. That was our objective. The fact that we had gotten so low, we would expect 930 to wick into that. We mentioned that if we were to go above, however, at 930, complete one-sidedness, we would expect short-term retracement into this range from high to low. This line here is equilibrium. So let's remember that. So we clear out the buy side, we return into equilibrium, clearing out equal highs as well that are above it. And now we break back under that equilibrium. So at this point, we already mentioned we want these lows. These are false lows in our mind. I'm gonna move this level. So we've cleared, oops. So now even though we're falling short of these premiums, right, we've already returned into a premium from the high to low. So now as we see this little seek and destroy that then gets broken, we like this 2-minute fair value gap a lot. Right, I'm also looking at this high, low, highest high broken. So this down close candle is the breaker I'm using. So now I have a breaker here. I have a 1-minute fair value gap. I have a 2-minute fair value gap. And I'll have a 1-minute volume imbalance. All premiums. We've confirmed because we've broken lower and now we still have sell side objectives to be met. So even with all that, still needed a confirmation. That confirmation for me was this candle rejecting that level once. We reject it once. At that time, I trust that this level can hold us. As we go into it again, I'm going short. We go into it a few more times, still hold. Ultimately, I get out at this low. But now as we break through this low, we're creating another breaker. Right? So this low that we exit on becomes the new breaker. Aligned with that breaker, new week opening gap. Same exact idea, right? I'm seeing price reject this. It's showing an unwillingness to break above. Same thing here. Once we close below the breaker, below the low, price is showing an unwillingness to go above the new week opening gap. Doesn't even want to get there with the body. So now as we run into that, right, I'm going short right on that. Catching that swing high. We exit at really sell side. Previous day low. Obviously, we ran a lot lower. Do I care? Not at all. Right? We could run for 100 handles. I'm fine. Drop the mic. Ah, I should have. There's no explanation either. Just cut it off. Just mid-sentence. Stop. Not imagine though. When you trade your real account, do you only trade with your buys? I would say yes, primarily. I'm looking for setups that align with that bias. If it's very obvious that we're going to counter trend trade, we'll do that. But for the most part, if I have a bias, yeah, I'm looking to go along with that idea. And like in here, I'm not really trying to buy because we've already hit equilibrium, right? So if I'm already looking for lower prices, I'm fine counter trend trading until we get back into a premium. So that's a good way to look at it. So like this long here, I would have been fine taking. I just didn't. But like, let's say that I knew we wanted to return into equilibrium. I'm fine going like this, right? Counter trend trading into that equilibrium. But once we hit that level, I'm a lot less, let's say, I'm a lot more hesitant to enter longs. Right? At that point, I'm just looking for shorts. We've got back into our 4-hour fair value gap here, though. That's the fair value gap we keep on playing with. So as we mentioned, we're just really consolidating, man. Oh, wait. I'm tripping. No, I'm not. Okay. Yeah, we're just consolidating here. So we will... Oh. Broke right through that. I like that, though. We're in that 4-hour, so at this point, yeah, we actually will wrap it up here. Practice what we preach, right? It's been a good morning. We've delivered into the objectives we wanted to see. So that sell side pull, Friday's low. If we keep running, so be it. We have all week. Actually, it's NFP, so it'll be a shorter week. I'll lie to you. But that's why we had a stream today. So just Monday, Tuesday, Wednesday. Because Thursday, I usually take off. But now that I think about it, we might actually have one Thursday. I don't know. I'm indecisive. Oh, one thing I did want to mention though. Over the weekend, the next 2-3 weekends, we won't have any webinars. I forgot to mention that last week. My bad. But in that moving process again, so the weekends will be filled with hassle, packing, loading shit up. After the new year, we'll go back to the normal schedule of the weekend webinars. But let's see, going forward, let's clear up some of this. It's not blinding. Clear up this. 15. So we have so far, let's go to 1 hour actually. Trading within the range, right? Crazy. Still working though, still working. But now, so we've cleared this high. Broken underneath this low. If we close under this low, we may load a high. We may want to come for this low, honestly. I'm just kind of looking at opposing liquidity. So what we've been doing, right? We create this range, low to high. We clear the sell side. We clear the buy side. We now have this new range, low to high, right? If we're going to reject after clearing buy side, we've already targeted into range liquidity sell side. But we may want to get into that external range here. So for me, closing underneath on the 1 hour sense, this swing low, I would look for at least the 4-hour consequent encroachment. Or actually, no, we had this as well. So I would look for the low of this 4-hour fair value gap right here. That's what I would look for. That's kind of a first target. Low of this 4-hour, if we can continue, then the next fair value gap. Let's see, 15. Yeah, because there's a low right there. So notice at consequent encroachment of that 4-hour, there is sell side resting right above that. So if we can continue bearish, I like those levels. First this 4-hour, and then the sell side, then consequent encroachment. If we get real animated, this external range sell side here would be it. Quick reminder, what's equilibrium? Equilibrium is the 50% point, right? The halfway mark between high and low of a range. So now as we take the highest high here in this range, all the way down to the lowest low that was created, highest high to lowest low, the midway point of that becomes equilibrium, right? So price will tend to revert to equilibrium when it's in a ranging environment. And that's what we were looking for here. So like now, let's say that we create this as a low, right? Our new range would be from the highest high to the lowest low. Equilibrium would be here, so we could see price return into that before then either running higher or breaking away. When I started trading in low probability conditions, when you started trading in these low, is that a question? When did I start trading in low probability conditions and not be afraid? If that's the question, I would say I got comfortable trading within the range once I understood basically how to determine that we were going to consolidate, if that makes sense. So for a long time, right, like this chop in here, this to a lot of people is untradeable, right? Higher time frame traders not going anywhere. So for a long time, it was untradeable for me because I didn't understand that within these fluctuations, we could still capture on lower time frame moves. So for me, once I understood that, okay, we're consolidating, I'm already expecting consolidation to occur. That means that we just target the opposing liquidity. So anytime we run out or we're at the extreme of a range, right? We came to the extreme of a range on Friday. We ran out all the buy side. We're in a huge premium. If we're going to consolidate, we're going to want to target now the opposing liquidity. So it's just a matter of understanding which liquidity is going to be targeted and targeting that in the short term, if that makes sense. We're not expecting price to continue to trend in any given direction. I learned hard ICT rules and something. That's fair, right? But even ICT himself has said that if you get proficient, you can trade within the range, right? You can understand you're within the range, and that's kind of his teachings. It was locked away in a lot of his rants, but that's the importance of it, is that he's taught us how to determine when price is more than likely to consolidate, right? And he's also now taught us how to trade within a consolidation. So if he's taught us both of that, you can kind of deduce that while he's teaching us how to trade within the range if we learn basically those two signatures. You have to understand first you're in a consolidating market, and then at that point just target, right, opposing liquidity. That's just experience, homie, Anton. Which is a cop-out answer, as I always say, but I can tell you something, or Michael can tell you something, but it really won't resonate with you until you sit through it. And that's something that I didn't understand until I sat through it. Right, to where we can tell ourselves, okay, I know price is going to go here. Right, you could have trusted, okay, price is going to go here. I know price is going to go here. I think price will go here. But in the time, if you haven't seen price deliver to your objective enough, with enough consistency, enough precision, you're not going to be confident enough to trust that price will go there. And I can't lend you that confidence, right? That's something that you just have to build on your own, seeing price deliver as you would expect. It is hard, brother. Yeah, it's hard as hell. It sucks because you think you could just learn and apply, but right, it's not. There's still so much that goes on in between that. And that's also why ICT concepts will never stop working, right? He could teach everyone in the world how to do it, but it's still going to come down to the individual, right? You still have to execute. You still have to be able to manage your risk, manage your emotions. And as you said, there's so many people out there that I've even seen personally. Sure, they could sit out here, right, and call the drawn liquidity all day. Highs, lows, they can get it right 10 times out of 10, but they can't execute on it. And at the end of the day, that's all that matters, right? If you can't execute on your bias, then there's really no point in having your bias. Harsh truth there. All we need is time. Oh, for sure, that's all you need is time. Time and experience in front of the charts, right? You got to do the hard work now. It just turns into sitting in front of these charts. I've put in my 10,000 hours, right? That's why I can do what I can do here. But sometimes it sucks, sometimes it's boring, but analytical correctness does not mean profitability. Very true, Rude Dog. Good way to put it. And that's what a lot of people, especially I'll even, right, admit it, especially the ICT genre of traders, they fall into that analysis paralysis, or the, idea of getting so perfect in their analysis, when in reality, yeah, you can have perfect analysis, but if you don't execute, that's the biggest step. The execution ability, the confidence in it. I always felt like execution was the last kind of skill set that develops. At least personally for me, that's kind of how it was. Right? I was able to see, just as you're mentioning, I was able to see the draw on liquidity. I was able to see the setups consistently before I was able to actually execute on them. Because just like you were saying, I'd be too nervous. That's just part of the process, right? That's part of the journey, brother. And then I'd beat myself up. Like, I'd be too nervous to enter here. To be honest, I would have been too nervous to enter here 12 months ago, and I would have wanted to see this fair value gap. So even within this, I could see my own progress. Where this was the clear-cut YouTube model, short-term high cleared broken at this low with this 1 minute fair value gap. I would have waited for that fair value gap to be traded to. I wouldn't have trusted this. I would have been nervous, even though I knew more than likely this would have held. And then I would have had to watch this move to my target without me. Been upset that I didn't trust my analysis. Whereas now, because I have seen this play out so many times, I'm confident entering here. And that doesn't mean that you're always right. Well, I could easily be wrong, but I'm still fine with the idea of being wrong because I understand I'll be right more than I'll be wrong. How do you arrange the days? What do you mean? You're saying, like, how did I get it, like, say Monday, Tuesday, Wednesday? Just the indicator. Right from Matt. The ICT all-in-one indicator I use. This one here. Gives you all the days and whatnot. Oh, before I leave, though, I did see there was a few questions. Let me see if they're in here. Someone had asked me. Oh, I guess Anton, I was going to answer your question in the chat, but I feel like I answered it already here. Right, the question you sent me about why I didn't enter the breakaway gap. So that's basically what happened here today. In that trade that you sent me, right, the question that you had was why I entered a certain fair value gap and didn't wait for a deeper retracement. And in that case, it's because we had other PD arrays lower that would support price. Right, so in this instance, flip it for like shorts. But even though we have fair value gaps up here, I wouldn't expect price to return into those deeper retracements if we have other PD arrays that should hold first, right? That take priority. So volume imbalance, higher time frame, fair value gap. It's really the same understanding and idea. Do I consider 50% of the displacement leg? I mean, only if I'm expecting price to consolidate. Or let's say if I'm expecting price to retrace and not be really trending, that's kind of when. So like here today, right, I was considering 50% of this whole leg here because more than likely this is where price would want to return to for equilibrium. That's really the only way I use it though. So either as a target for price to draw up into, or if we start moving away from it, confirmation that we can now continue to look for targets. Oh, and the other question, Magic SJ, are you in here? Let me see. Magic. Yes, cool. So Magic, you had asked me the question in that photo you sent. Why I didn't long the 5 minute fair value gap. I don't know what day that's from. But anyways, if you were to look at that chart, okay, notice how when we clear that buy side liquidity, the 5 minute never closes above that high. And when we opened, the very next candle opens with the bullish volume imbalance that gets negated. So at that point, I'm already expecting price to return lower. And that was more run on stops than actual market structure shift. So I wouldn't trust the bullish fair value gap that was created. Instead, I would want to see it become an inversion, which is why I was okay going short into it, targeting lower prices. Friday. It was from Friday. Okay, yeah. So maybe I could just show you here. Yeah, there it was. So as we close above this high, right, we're in a consolidation marketplace. I'm still having that same idea. We're closing above this high. It was a previous day high as well. And we can never close above it. Instead, we close right on it. Next candle opens with the volume imbalance that gets negated bearishly. So to me, everything there is bearish. So now I would look for sells to a target opposing liquidity, as you saw. And that's what ended up being the target. Reversed it after we hit that, went long here. Ultimately, we continued long, but I was fine with the morning. Ooh, getting hella questions. Love it, people. All right, where is my stop? Sorry, Roscoe. My stop on my first trade was above this fair value gap. As I mentioned, I would not expect this fair value gap here to be traded into. If that's the case, we can be safe with our stop inside of it. Well, that's why I had it at 2 handles, just for a round number. So it's just barely inside that. I'm not expecting this fair value gap to be hit, which means this one should hold. It holds us into target. First trade. Second trade. Same idea. We have now a new fair value gap that got left here. I don't expect that fair value gap to be traded into. Stop goes right there to target our sell side. All right, so these were the original setups and framework for those trades as we went lower. And then we could. All right, so as we hit this one the first time, and then as we hit this one into the sell side. For today, if the volume imbalance wasn't there, you would expect price to go to the, okay, so for this first trade, I would say, all right, if this volume imbalance was not here, I mean, it's hard because it's in hindsight, but let's not, yeah, this fair value gap's not here. I would have been less confident in this. So to be completely fair, I still wouldn't have wanted to see price return into this, but I wouldn't have had the confidence to enter. And that's the big difference. To where even as we've been explaining today, I would have had, let's say, the anticipation to expect price didn't want to return into this, even if this was no volume imbalance. But I wouldn't have had the confidence to actually execute on that idea. The volume imbalance here added an extra confluence, especially the fact that it's this sensitive one, right? This candle never returns into the close. So having here as a confirmation for me is the confidence booster. And that's why I'm okay using it to go short. Yep, you got me, Rude Dog. Would not have entered there. So this would have been an instance where I just watch. And I would have honestly waited to see if we hit this. So if we would have came up into this and then rejected, I would have looked for an entry. But I wouldn't have felt confident just entering as we're stabbing up into that area. Good question there, actually. Made me think about it as well. The indicator is in the general chat, brother. But the upper fair value gap you place your stop under is a breakaway. I mean, ideally, you don't want breakaways to be filled. That's why they're called breakaways. If I'm expecting a breakaway gap, I don't want to see it filled in at all. But yeah, if you go to Casanova, go to the member generals chat. Ethermat has shared it somewhere. I'm like somewhere in there. It can, but you don't want to see it. All right, so that's where you have to listen into the inner workings of him. And that's why ICT is tough, right? Because he kind of, I wouldn't say he contradicts himself, but he says something and then in rants, he'll go into deeper talks about it. So sure, breakaway gaps can be in theory fair value gaps that don't get filled halfway. If it doesn't hit consequent encroachment, you can technically count that as a breakaway gap because it doesn't get fully filled. But if you're really bearish or bullish, doesn't matter. Whatever your bias is, you don't ever want to see breakaway gaps be traded into. You want to see price move, break away, and never return into that area and continue to move. Whereas, right, if we did hit it, that's more of an institutional order flow entry. Price can use that. Look at that, though. Right into the 4 hour, we spoke about consolidation. So at this point, though, we're just chilling. Two points late from entry. That's fair, Ergan. But waiting for a reaction, right, there's nothing wrong with that. And at times I've done that too. But that anticipation skill set, that'll come, as we often say, with time. Such a cop-out answer. I feel so soft saying that every time. That's really how it is, unfortunately. That you'll see it once, right? Twice, 3, 4 times. You won't execute on it. You'll see it 10 more times, right? You won't execute on it. But eventually you start anticipating it, just like I do. And still, once you finally can start anticipating it, it's not even like you can execute, right? You still have to anticipate it 5, 10, 15, 20 times, see it play out as you anticipated. And then finally, right, that 21st time it's happening, you feel confident enough to enter. And then that's when you lose. That's really how it would be. But now you get me. You get me. A daily bias. Let's see. I mean, for me, daily bias. This low. Thursday's low. That'd be my daily bias. We fell short of that high. 1, 2. Yeah, I want to see the previous 3 days lows be cleared. We've cleared 2. This would be the final one. I mean, I'm still bullish long term, but some retracement would be nice. You know what I mean? Even into this. I could give us all the way back into this volume imbalance here and still be bullish. But yeah, 4 hours same way. Seek and destroy, okay? So I'd like to see high cleared, low cleared, and then we'll see what happens from there. So as of now, bearish, all bearish. Oh, look at that. Speaking of breaking lower. You consider that fair value gap breakaway because it's created. I consider a breakaway because I'm seeing this range here is balanced. From this high to this low. We spent a lot of time, like if I go to a 30-second chart, okay? We hit this high, we create this low. This highest high to lowest low. Everything in this range has been balanced. So if I was to drag this out like this range here has been balanced. So as we leave it, right, as we leave this, even though there's a 1 minute fair value gap here, I wouldn't expect price to return into this balanced price range. We've moving away from equilibrium as well. Remember that? So let me pull up equilibrium again. We're moving away from that equilibrium, creating a BPR. I don't see any need for price to return into this, especially because we broke underneath the volume imbalance. this fair value gap here, right? So we've broken through plenty of discounts. So there's no need to return into this one here, or this premium. But yeah. If that is all, good day today, honestly. A lot of questions, I like that. Gets everybody better. Yeah, as I mentioned, going forward, I still would like lower prices. So we'll see what we can get tomorrow. For the afternoon, if I'm an afternoon trader, I would kind of look for a retracement into this up close candle. Right? Higher time frame fair value gap created as we break through an old low. I would expect a fair value gap like that to hold us. So I'd be looking for something to take place in here that would signify lower prices and then try to take that short. But cool. Tomorrow we have news. Let me double check. $9:45. Okay, high impact news at 10 Eastern tomorrow, so we'll have a little bit later start time tomorrow. So yeah, we will be here 9:55 Eastern, just before the JOLTS job openings. But until then, continue looking for lower prices. But yeah, have a good afternoon, everybody, and we will talk tomorrow morning at 9:55. Take care.